everyone, and welcome to another episode of XVC Tech Insights podcast, where we dive deep into early stage investing, getting successful founders, innovative projects, and top tier VCs to the podcast every week. I'm Aneri Merchant, investment manager at XVC Tech, the investment arm of the XDC blockchain network. Today on my podcast, I have with me Milind, who is the Chief Strategy Officer of Polytrade, one of the leading names in RWA space. Now, before we delve deeper into what is Polytrade, what does he do at Polytrade, let's talk a little bit more about what exactly is real world assets. Real world assets could be assets such as gold, silver, real estate, vintage cars, arts, which can be tokenized on the blockchain, ensuring full transparency, access, and security. They basically act as a bridge between traditional finance and DeFi. So, Milind, welcome to the podcast, and thank you so much for gracing the podcast here today.
Thanks, Aneri. Thanks for having me. Really excited to be here and excited to talk about RWAs and where that goes.
So, you've been with Polytrade for a couple of years now, and you've grown Polytrade right from what it was into early stage to what it is now. But before we delve deeper into what Polytrade does, let's talk about yourself. What has your journey been? What was your prior experience? How did you get into the world of Web3 and end it with what you do at Polytrade?
So I have almost 10 years of work experience now. I'm an engineer by training, but my whole career has been in finance. So I spent the initial years in investment banking at JP Morgan. I did about 4 years of that. That's across capital markets and M&A. So I saw both those sides of investment banking. And during my final year at JPM, I think it was 2017, Bitcoin was suddenly had those massive gains, and I was intrigued by what is this, because in JPM we didn't hear about Bitcoin at that point. And that took me down a very, very long rabbit hole. I'm sure a lot of your viewers might have gone through that, is to understanding what is the blockchain, why do we need it. It took me almost 6 months. I wrote a whole paper on it. And it just made so much sense to me being inside JPM that if basically what a blockchain would do is essentially remove trust, right? It makes everything trustless. Code is law, in other words. And that means your entire financial system and your legal system can come on chain, which was a huge revelation. And all these processes, the manual work that goes into it, the amount of time that is spent in something as simple as settlement could easily be done away, right? So that was my aha moment of 6 months, finding out why do we need the blockchain. And as I started investing in, the ICO boom was going on, so I made some money that helped convert me as well. And thereafter, I think technology is the real zeitgeist of our time, right? It's really, really advancing. So I wanted to not be in investment banking and do something which is more closer to technology. So I spent another year and a half at a venture capital fund based out of India called Kalari Capital. Again, this is 2018, so no one was taking Web3 very seriously, though part of my job there was building Kalari's small ecosystem in Web3 and then trying to make the MDs and partners understand that, hey, this is worth looking at, right? So I remember doing a lot of internal kind of presentation as to why Bitcoin, why does it make sense? But Kalari didn't really take it as a thesis till we 2020. And then my road after that was more on the entrepreneurship side. I joined Navi, it's an early stage. Then it was an early stage startup, but it was by the Flipkart founder. So I was in the part of the first 12, 30 people there, spent some time there, and eventually I moved to the UAE when I got married. And once I was here, I think for me personally, a lot of things changed for Web3, right? One was existential risk, I think completely went away because I could see sovereign wealth funds investing in this already. This is like 2021. Dubai was becoming very attractive as a place to do Web3. And I think if there's no existential risk, then it just means this industry is going to flourish and grow, right? So my call was, I spoke to some of my friends, some of the people who I trusted that, I'm coming to Dubai, should I get into Web3? And the overwhelming response I got was, it makes sense and let's do that. So it's been almost 2.5 years now at Polytrade. Polytrade made sense to me because kind of tying back to JPM, traditional finance, and then getting that on the blockchain. So to me still, like, tokenizing finance seems the end goal of blockchain, at least to me, right? That is maybe everything will look like DeFi, but we have to have real world assets on, and that's the real economy. So that seemed like the best fit, and Polytrade seemed at that time Polytrade was doing trade finance, but very soon after I came in, we decided to pivot a little bit. We had done about $10 million of trade financing, which is basically tokenizing invoices, receivable insurance-backed invoices that we used to do. But the macro background when we were doing all of that was FTX had collapsed. There was a huge premium. Maple had gone down to zero TVL, right? For your viewers who don't know what Maple is, Maple is was a basically a on-chain lending to market makers at that time. That's what they used to do, and that fell to around zero TVL. The risk premium essentially on financing anything on-chain had just gone through the roof, right? So you couldn't really get the financing, um, and the borrower that we have are all Web two, right? So even if you ask a supplier who was our who needed them, who we used to lend the money, do you care about blockchain? Firstly, they don't. They want the money, right? They want the financing, and they cannot obviously raise their cost of borrowing. So overall, it felt like the PMF isn't there in DeFi for RWs at that point. And the other thing that was happening for us is we were working with Mastercard closely, and at that time with JPM as well, on building a private market for tokenized assets for them. And we thought, why don't we there's a there's another thing happening is there's a lot of supply of RWAs coming. Think about like 2023, end of 23 timeline. 70, 80 protocols are trying to tokenize assets and bring it out. But where do you even start your journey as an investor to find what asset it is? So we said, let's take that technology we built from a marketplace for JPM and Mastercard. Let's put it into DeFi, and let's kind of become the gateway to RWAs, which would mean something like an OpenSea or an Amazon. So if you want to find any RWA today, and we have over 7,000 assets, it could be something fun like a Pokemon card or like a vintage car that you said. We do have a Ferrari, I think. You can find that, or you could find savings products, commodities like Paxos Gold, for example. You can come and use our AI search, find that asset, compare it with different things, and then buy the asset and then secondary trade assets. We can't secondary trade everything because some of these are licensed like equities, but you can secondary trade what you're able to, and eventually we will get to everything. But essentially, it's the one-stop shop for RWAs to really find the asset you want, right?
Okay, so Milind, you've spoken about how Polytrade works in terms of DeFi. And when we are talking about DeFi, we can't keep institutions separate. So I'm sure that Polytrade works a lot with institutions as well. Can you throw some light on how Polytrade does the work with institutions?
Yeah, so that's right. We actually have two separate verticals at Polytrade. One is the front-facing one that we spoke about, and most users can see, which is the kind of public uh, DeFi marketplace where you can find all tokenized assets. We also work on the institutional side, and we have two core technologies there. One is ERC6960, which is our own authored RWA Ethereum standard. That is also used in DeFi, but for institutions specifically, it has a lot of properties such as, you have real world scenarios. Could be like how much grace period do you need, or what would happen in soft vindication, hard vindication. Now you can put in some of those rules, and it can also kind of split payments. So if you have 10 fractions of something, you just settle the mother, and everything else gets calculated and paid out. So ERC696 is interesting for institutional or tokenization side. And then we also use a version of the marketplace for institutions, right? Which is for more like institutions securitizing assets. And you have some extra features there, which are, say, privately shown deals. You don't want to show everybody that you have this asset you want to sell, but you want to only show a few investors for like 7 days and then make it public. So we have features like that where institutions I mean, 2, 3 use cases. I think trade finance is one that we use a lot. So there's invoice financing, receivables financing, and then there is banks' own assets to be securitized and secondary distribution of those assets. And we do that on the institutional side. So we work with XDC PNP on that. We work with a bank in the UAE. We worked with JPM on that earlier, and we're part of the Mastercard MPN program. That is another Mastercard network for institutions and banks to work with. So we're one of the apps on that network.
So I think from your talks, it seems that Polytrade found a gap in the market very early on as compared to probably a lot of the projects that are currently finding or building on that narrative. And it also gives the users a lot of options to choose from in terms of what kind of RWA assets do they want to invest in, or something that they believe in, because everyone has different risk appetite, different preferences, and different time zone horizons as well for investment. So I think this works very well in terms of catering to a large crowd. So since you are in the RWA narrative, there's been a lot of hype around market cycles. The narrative keeps changing. RWA has remained pretty constant, I would say, over a long period of time. Do you think we would see a fundamental shift in terms of how RWAs could actually reshape the entire financial industry, or do you think that it is too early on to commit to something of that sort?
I would say yes to both of those things. I think if you look out like 5, 7 years, little long term, I think it's inevitable. And even large institutions now recognize that it's inevitable that finance is going to come on chain and real world assets are going to come on chain. I think there's no doubt about that. But there's also how much hype is there right now. I think the real PMF in RWs still is stable coins that and payments. That's really been a big PMF, which is kind of a leading indicator to, of course, now if you're doing payments in stable coins, and if you hold some of them, I think stable coins in emerging markets like a store of wealth is also a narrative that's played out. But can you do more with them, which equals to RWA? I think even from the retail side, it's going to come about. But there is hype right now. There's no real large scale PMF on the RWA assets themselves, in my opinion. But we will get there, and I think it's inevitable.
So, as per a recent report, there has been around 20 billion assets which have been tokenized on chain. There are big financial institutions such as BlackRock, Citi, Franklin Templeton getting into the space. Now, since we talk about RWA, apart from the stablecoin, which captures most of the market of the RWA currently, we also see a lot of other assets being tokenized on chain, which could mean art, vintage cars, something like you said, Pokemon cards, or vintage cars, anything that has value can be tokenized on chain. So, apart from the stablecoin narrative, what kind of assets do you think is getting the most amount of attention right now? And what asset class do you think would be something that has actually not got its due attention till date?
The top three are treasuries, which have, we've seen them grow. They should be about, I think, maybe 3 billion around of treasuries out there, another billion of commodities. I think the reason these have had PMF is they're the easiest to understand. And easiest to kind of users to take up, right? As compared to something like private credit. So I think RW has gone through this stable coin, then private lending, which kind of died with FTX. And now the new emergence is treasury bills again because of some macro factor like T bills being at 5%, and commodities now. And then real estate is the last one. In my opinion, these have PMF, but there's still more to be proven, right? So if you look at treasury bills or commodities, if you see the number of holders that hold, it is not that much, right? If I were to pick the largest T bill out there, one of the largest, it has maybe less than 4,000 holders, right? So these are big whales or big institution HNIs. Mostly, I would say two kinds of capital. One capital is either on-chain capital that needs treasury management, could be a DAO, it could be a company that's investing in T-bills, or these are large investors providing liquidity, kind of bootstrapping protocols. So it's not as widespread as it should be. So we're still in the early stages, but by far the breakouts have been these three categories. And I think that they will continue to lead in the near future. I think we will see more adoption in emerging markets from smaller players of these assets. Little by little, we go down the risk curve. So we're going to see bonds come out. I think that's going to be interesting in the future. And then I think there's going to be some really long tail kind of asset, in which I personally feel is going to be something like creator royalties that will break out, because that can really get the masses on chain. If for example, we have we're actually distribution partners of a protocol called Another Block, which has assets like Rihanna's music and Justin Bieber's music. So I think that can really hit a tipping point in terms of fans adopting that technology. So I'm not a fan of those, but if it were my favorite band, my favorite rock band, I would love to have bought.
Because you are getting royalty for something that you're participating in it. So that's something like you're getting incentivized to hear, say, Justin Bieber's song more as compared to something else where you probably don't earn enough money.
And if I think about pure retail, then maybe everyone does not know, like, what's the best investment opportunity, but someone might know, hey, this song is good, it's catching on, I should invest in it. So it's super easy for people to understand. I think that could be a breakout, which hopefully I think we'll see a breakout in kind of royalties. It could be a YouTuber, tokenizing his future return. Something like that might be the retail tipping point.
So when we talk about RWAs, like you said, yield, right? So we cannot separate DeFi a lot from RWAs. They somehow go together. And we've seen at various conferences that there are a lot of panel sessions which talk about RWA versus DeFi, which one's going to win the race. But from your perspective, do you think RWA is competing with DeFi, or do you think it's a means of completion? Like it's a circle that completes the entire thing as a combination of both?
These being two separate things, I think is a false kind of concept. I think what DeFi really is, from the RW perspective, is DeFi is RW advanced, in my opinion. So when RW is really come on chain, they are going to look more and more like DeFi. DeFi is instant, it's quick, it's automated, like automated AMMs, for example. All of that is going to come to RW, and RWA in the future, like 10 years down the line, equities will be working in this way. So I think DeFi is kind of ahead of RWAs, if anything, and no competition at all. We've seen some protocols adopt RWAs into their DeFi stack, right? And it's going to continue to happen.
When we talk about RWAs, having a blockchain is as important as having an asset, because that actually means that the asset is transparent, it's secure depending on the blockchain it is on. So, XDC is a layer 1 EVM compatible RWA first chain. How important do you think is a purpose built RWA chain as compared to any other blockchain that would be in the space? What would be, from an RWA project's perspective, how would you choose a blockchain to be built on?
Yeah, I think definitely there is a requirement for the chain itself to be purpose for RWAs. And there are some technical needs, and there are, I think, more, even BD, for example, is important in that respect. So technically, I'd say, for example, XDC, I think the all the validators are KYC, they're known validators. I think that's an important thing. If you really want an institution to use your technology, they're not going to do it if for example, there's a regulation that comes out and the validators are not known, they don't follow the regulation. I don't think there is any comfort for institutions to do something like that. Identity is another big one, right? You want identity to be at the chain level where you can still have all these protocols do their thing, and there is an identity layer overall where KYC norms are accepted by everybody. In fact, there's a major pain point for us at Polytrade is also different KYCs for every single asset, right? So we have 70 plus partners right now whose assets we list, and a lot of them need KYC and different KYC. So for a user, it's a very broken journey to go through that, right? So that's something that we want to solve actively as well. And the chains that do it, also, now that we have more and more chains focus on RWAs, there is another problem, which is interoperability between these chains, which is going to come out very soon. But definitely, I think it's a need in institutions really need it, and will be, they won't be able to deploy on other chains that are not purpose built. And to your and the second part of this is, the network is also as important for a chain, right? So if you build the track record, if you have a network in RWAs, a lot of network effects get built up over time. So you have, say, a lending protocol, you have Polytrade, that's a marketplace, and you have these all fit with each other. That is a big moat for a chain to have, and it's a big for us when we're considering going to a new chain. If they have our, we don't. So just so your viewers know, we don't tokenize anything anymore, except with institutions. So we just aggregate. So if there's no RW density on your chain, people like us have no incentive to come on your chain. right? Because there's nothing to play with. So I think that the network is as important. So the BD effort that goes into a chain that's RWA focused is also super important. With XDC, for example, we do get access to institutions and big players, right? That's important to us. So both of these things together, I think definitely RWA chains are going to win versus general purpose chains.
So now we've talked about like what you said, that how important is a blockchain protocol for an RWA project. We've talked about uh, Polytrade, but now let's talk about who are the users who really want RWAs, right? From your perspective, do you think it's mainly retail users, mid-market companies, or would it be financial institutions who are actively looking into deploying their assets for RWA?
I would say it's a matter of time scale, right? For anyone who's building out there, I think right now it's like an inverted bell curve. So I think institutions and retail are both going to be first adopters, and there is a lot more nuance in how that will happen. But I think that's definitely where you should focus, right? So on the institutional side, I think last year's it's been talked about more than enough. BlackRock's Biddle Fund was a major mover in most of the conversations. I don't know if Aneri you felt this, but I have. That has pushed a lot of institutions towards looking at this way more seriously. Even more so that was done on Ethereum, which is a public chain, right? So we had this whole narrative of private chains and consortiums. Eventually, like if you had spoken 2 years ago to even innovation lab inside a large bank, they would kind of say that we know we need to get to public eventually, but we still like internally are very comfortable private, even though the innovation lab guys understand there's no point, you need to go to public. So I think that's been a big move, but I think both of these are the immediate ones. Mid market, I think, will be tougher for someone who's going after that. Um, and if I were to pick between retail and institution, I think institutions still going to take more time. I think we're going to have some breakout movements on the retail side, kind of like stable coins, which will really like be the next breakout for RWAs.
So for retail users, it's mainly access to assets for which they were previously locked out of, which they get, say, in terms of buying some really rare whiskey, or probably some really nice Da Vinci painting or something of that sort. But for institutions, that would also mean that it would take time because of the compliance, because of operational efficiency. They would need to change pretty much their entire tech in order to adopt that natively. So that is a longer term process, whereas in the short term, the retail users would pretty much catch up to this. So, since we are talking more about institutions, let's get real. Do you think institutions really want RWAs? Like, is it all about risk adjusted yields, or is it something that the institutions are concerned more about regulatory and licensing environment before they go all in? So, what is your take on institutions coming into RWAs?
When we talk about institutions, they kind of have um, all pieces of a puzzle, right? The difference is the rail. So they have mostly demand, they have the capital, they have the supply also in most cases. What they're looking at, in my opinion, is more about um, efficiency, unlocks, and maybe new markets, right? These are the two things that have mostly resonated with everyone I speak to. And maybe I can take a small example of something that maybe not all viewers understand about RWAs. It's a concept that we go to with Mastercard for a lot of pitches. So the concept is called delivery versus payment, right? Which is a very small thing. It only means that if you're buying an asset, as soon as you pay, you get the delivery of the asset even atomically at the same point, right? Because both the asset and the payment, it's instant and atomic settlement, right? So it firstly removes counterparty risk. But the more really important thing and large unlock here is in the traditional world, it might take a week to do that in some cases, right? Which means 1 week of returns or yield is lost in the process, right? And if you think about someone with billions of dollars in capital to invest, that is a huge unlock. They're not increasing the risk, they're just increasing the efficiency of capital.
Every day adds up quickly in terms of yields.
Exactly, right? And same thing was with, something you guys, both of us have been into trade finance, right? If the settlement, I mean, generally in trade finance, you would see 10 days, 5 days delays in payments. Firstly, that this stable coin, that's not needed anymore. And if you can finance that on chain as well, then you can get the asset yield also immediately, right? You're not waiting 2 3 days for the asset to transfer, go into a trust and do all of that. So I think like that one small thing shows you how much efficiency can be unlocked, right? In trade finance, if you're looking at 3 cycles over the year, that's 7 into 3 or 4 cycles over the year, that's 4 into 7, 28 days of yield that you're getting extra, one whole month in a year. And for a large balance sheet, that's a lot.
Yes.
So like those nuances of efficiency, I think are most important to institutions. And then it could be new markets. I think this a little premature, but I think a lot with the stable coins, the acts coming in the US assets going abroad and becoming more accessible is also going to be a theme. We saw Ondo did, is kind of working towards that, you know, having more distributors abroad. I think that's also going to be a new market that now institutions can tap into purely over the internet, right? The Africa emerging market, something like that, which is the second thing that we see. And the last piece would be completely novel use cases. Again, in trade finance, one thing that we discuss a lot with trade finance focused institutions is deep tier financing, right? And that's a lot easier to do if you can programmatically kind of offset the risk. I don't want to go into the details, but it's something that blockchain can do a lot better than traditional systems. So yeah, just to summarize, it would be, I think, efficiency number one, new markets, and new kind of business model that were not there before.
So hopefully there comes a day when we speak to institutions who saying we're exploring blockchain within our system to saying we've actually adopted the blockchain tech, enhancing the instant settlement, giving better yields to their customers, and at the same time reducing the compliance burden as well on their team as well.
Massive. We just talked about one, but they are really, really sizable. I think that day is coming. It's not far. The 2024, the amount of, even just we're in Dubai, so even here, the amount of banks, logistics partner that we've spoken to, they are really serious. And I think it starts from payments, but it would very soon trickle down to tokenized assets and the efficiency that can bring.
Even like trade finance, something that you mentioned about is a $3 trillion trade finance gap, which is something that could be made very effective if blockchain is actually integrated, like tokenizing invoices, which Polytrade started with, but also providing alternative financing to the importers and exporters to make things more seamless rather than using a single bill of lading and going to different banks. That one bill of lading could be tokenized, reducing the fraud and reducing all the counterparty risks that are currently there within the trade finance space. And since we know that that space has not changed since hundreds of years, it's pretty much where it was, pretty much Web 0 or Web 1, as we say. So that has a massive potential in terms of change. And I think institutions should be the first ones to adopt. And then we would probably have a trickle down effect to the world in general.
I agree. I think that is the way it will go.
So now, assuming that adoption goes similar to what we just spoke about, who do you think would be the winners? Do you think it would be like native blockchains such as XDC, projects such as Polytrade, or do you think it would be DeFi protocols? What is your take?
I think this is a very pertinent question because I don't know, Aneri, if you've seen this, but I've seen a lot of players come into RWA recently. A lot of them are pure tokenization, right? They are looking at, providing tokenization as a service. I think builders and founders should really think about this a lot deeper before they get into it. Every large institution is going to do at some point, even if they use your system, they'll do a rent, build, buy, some kind of analysis, right? And if you really think about it, tokenization itself, the IP is not there. You cannot build a system where you have some IP that a bank needs. Literally, firstly, anyone can build it and the bank itself can build it. So as soon as you get to scale, I think you're going to be in a difficult situation and have no moat if that's all you're doing. I think for anyone who's targeting either mid-market or banks, you need to really think of the moat you have long term. And I think right now the moat might be you do something on the services side, could be compliance, could be regulatory. Maybe you have a credential, you're regulated, you could do something like that. Even that I think is medium term at best. Long term, it has to be a network moat. Otherwise, why would a bank give away percentage of their transactions, which is going to be in the billions, to a provider, right? This is, in the end, tokenization is not like AI. You don't have anything proprietary here. I think chains will survive. I think you need to build. So even for Polytrade, we do institutional, right? We're working with your plug and play accelerator, for example. We're working with a bank here in the UAE. We work with MasterCard, as I said before. But in all of this, we do want to come out at the other side being between few institutions like a network, right? Instead of being pure tokenization play, because I think that's going to get very easily, it's going to become generic and there's going to be no moat. And your own client is going to probably figure out, hey, I can just build this instead of renting it as a percentage of transaction fee.
So, from what I've gathered, if we want to go ahead long term, we all have to come together to create a network effect and grow together. There won't be probably any single player that wins, but it is an effort from all the sides that makes RWA a big narrative that is here to stay
Yeah.
and not for the short term.
That too. And I think if you're a player in this space, services or tokenization, even product for tokenization, I think is going to have very few moats in the future. You need to be somewhere in the network. You could be, you could be, I mean, validator is one piece, could be great. Being a chain is great. I think us being a marketplace with many potentially institutions on it is great. But if you're just providing tokenization as a service or you're doing a single product, I think that's going to be outcompeted very fast. Even on the product side, like right now, the largest companies in RWAs, if you think about them, they're all product companies, right? So Onlo is doing T-bills. If I think about Web 2, and just if you think about this trends, right? We have Biddle now. Yeah. Do we really need a startup to a startup cannot compete with the trust that a BlackRock can give to the product, right? You need to have a network or a distribution moat at the end of the day because once banks come in, they are going to have all the products and they're going to have trust, um, and they're going to have lower fees. So actually, Bill has lower fees than Onlo, right? So it's very tough to compete in financial services on the product side where you need so much trust. You need to build network or a moat like that, which I think kind of what Ondo is trying to do now with Ondo markets. But yeah, there's this small takeaways. If you're selling to banks as technology, really think about it. Why will they use you later? You have no IP. So you need to, right now go to compliance or some services, investment banking, maybe have the capital that you can get to if a project a bank wants to do. And really long term, think about how do you build a network and you're part of that network that has that moat in it.
Currently, we are seeing lots of RWA projects or startups coming into the space, building different things. But like you said, when the industry matures, probably a few startups will die down, but there'll be a lot of M&A activity that actually happens in the space. So probably BlackRock would buy out certain companies, hopefully. Polytrade. So there would be a lot of mergers and acquisitions that actually take place within the space, which would mean that the market is maturing and it is ripe for expansion at that point in time.
Even there, I would say, what value would BlackRock buy? It is very unlikely they will buy us for the tech because tech is mostly open source and it's trivial. I hate to use that word, but it's ERC20s we can all do, ERC105s we can all do. It has to be either your network that you have or a distribution that you've created. It has to be on that side, and they can get the product is the other thing.
There has to be a moat for which they buy. So that's something for which they just integrate within BlackRock and just scale themselves rather than building the product. So now, as we spoke about RWAs here to stay, this is what is my takeaway. But let's get to a new narrative that's been coming up in the space, which is AI. And I recently read that Polytrade has actually built an AI team. So I'm really curious to understand what is the AI narrative in the RWA space and what are you really trying to achieve by building a team? What's your long-term vision of AI versus RWAs?
I think we came out with our vision document in January, as we do, and we had a lot of time to think in December about AI because everyone was talking about AI anyway, and our investors always end of year want us to think deeply about things. Um, I think there are pockets. AI is going to affect everything, of course, but in RWA there are like four pockets that we see for AI, right? More um, agentic AI also maybe. So if you look at the user journey in RWAs, it starts with awareness. Hey, there is a product like, let's say, anything, a T-bill or a Pokemon card. the first thing that an RWA agent or one of the agents that we think and we're already developed is going to be on the awareness side, which means can you be the outbound salesperson? Can the agent be a influencer, right? Any of these two modalities. And can you reach the top of, can you get more top of funnel for Polytrade? That's going to be one important one. The second is lower down the funnel, you're going to have an investment advisor for sure, right? And the investment will take your risk preferences, will guide you through it. So that's being built on Polytrade very soon. If you go to the Polytrade app, we already had AI and search, but now we can chat with somebody very soon and give your preferences and it will recommend stuff to you. And then I think that the third piece, which is maybe not that obvious, is on the risk and monitoring side. So what I mean by that is credit opinions. No one has time to read full disclosures, right? Thankfully, we are getting more and more of those in RWA. But these are big prospectuses, big documents. You want a quick, concise view. That's the very rudimentary piece of it. The really advanced piece of it would be, can the AI on a real-time basis update those risk parameters, right? So for example, if a tariff comes out, can the RWA say, hey, if you're lending into this company that cannot export to the US anymore, that's a huge risk. And that is something only an AI can do, or an analyst, right? An AI can do it way faster. And there could be multiple such macro scenarios. It could be something to do with, say, the company is very close to a covenant breach, right? The AI can do that rapidly. So we're going to have something that's real-time risk monitoring, real-time kind of analysis that you can get. And the final piece is, I think, an investment manager that's an AI. I think that's personally, I don't know, Neri, how you think, but I personally am very scared to give AI my money right now. Yeah, for sure. But I think that is coming and it'll come eventually. So we're going to have, and then blockchain is a really good rail to have when that happens.
So probably AI is used much better to aid decisions in terms of risk scoring, in terms of automation, or probably in terms of better asset discovery in your case because you have so many assets. So AI would probably help better in for users to get access to, depending on their risk, their money, and whatever are their preferences. It would help more in terms of the risk discovery.
Yeah. And then also I think the monitoring part is something people kind of overlook, but it's super helpful. If I was invested in trade finance and there is some news about that company and I can get alerted, that's super, or even something more tangential than that.
Right.
That'll be super helpful. Yeah.
Exactly. So now, since we've talked about so much about trade finance, about institutions, RWAs, one of the most pressing factors is regulations because in order to operate in different jurisdictions, you would need to be regulated in those jurisdictions. Apart from the cost, which is it's very cost heavy, resource heavy, but it also takes a lot of time, and most of the jurisdictions still have a very gray area in terms of the licensing part. So what are your takeaways, that do you think the adoption is still slow, or do you think the startups are not being able to scale as fast because they are short in terms of money to apply for these licenses, or because the licenses simply take too long and they are way too complicated in different jurisdictions? What's your take on regulation?
I think all of that is true, but for RWAs, I think there is existing regimes we can already fall back upon, because I think changing the substrate does not change the asset, right? So if you're doing equities, which we don't trade because we can't, I think it's pretty clear that you need an exchange license to do that in almost any jurisdiction, barring a few. So I think RWAs, there is a fallback that you can always go to in terms of regime. The really interesting thing that can happen from the regulatory perspective, I think, is something that we saw DTCC do here, which is actual land titles on the blockchain. I think that is a game changer really for the UAE, because till now we were putting real estate assets in an SPV, and then the equity of that was actually trading. Now that you can trade the title, I think massive unlock, right? So if in the future in our depositories we have blockchain enabled, that is, I think, a huge win for any. And I think the UA has done a brilliant job. I think you can speak more to that as well. But I think those unlocks will really, really help startups.
Okay, one unrelated question that just popped up in my mind, because of so many assets which are probably going to come up in the near future, do you think the traditional investments such as the stock market is going to go for a toss? Because at the end of the day, people have limited capital to invest. So if they are prioritizing another new asset class over a traditional market like stock markets, or say bonds, do you think the stock market or the bond market would suffer?
When we saw index funds and all of this come about, right? You had so much capital flow into these instruments because they were easily accessible, easy to understand, and somehow the stock market just kept going up. Now, if you have everything easily available, I don't know. That's a really good question. That is a really good question that we should think about. I think.
Because even example, if you take the Indian stock market for example, most of the liquidity comes from financial institutions. So most of the spikes that you see like -2%, 3% is because the FIIs suck away the capital out of India, probably to invest in the US markets. And that's the reason the entire market goes down, and probably is just dumping on the retail, which pretty much happens even in crypto. But I'm just thinking from a broader perspective.
I think it should happen. I don't know how much more capital we create in the future with productivity gains, but I think it should happen that because equities and bonds have been so easy to access, and once you get easier access to other asset classes, you should see a shift away.
Like, probably I would be really excited to invest in a rare whiskey collectible myself, or probably like a vintage car. That would be something, or a watch. Watch is something I would definitely be interested to invest in. So, a lot of my capital would probably flow from the crypto market and stock market to these. And it's aspirational because you want to own that piece, right? So, you would, and you can't spend so much money at one go. So, probably tokenization would actually help me say, hey, I'm a proud owner of a Patek Philippe or something.
I think definitely something that you said about being proud owner is important. Somehow you need to show off your tokenized watch. That is something we need to unlock really, like NFTs. Maybe there's a way to show it off, but that is a big part of it. But definitely, as more asset class get tokenized, I think we could see capital moving to other things, and it's even really niche stuff like, cash and carry trade on Athena, right? We didn't have access to it as retail. There is, there are. I don't want to mention names, but for example, payment, you know, 1 to 2 day payment financing, right? It's a really good product and we don't have access to it. Now it's tokenized and you can get like 12, 13% on that a year. So why not do that versus a bank deposit? I think that is definitely going to happen. So capital is going to go to the best source, most efficient utilization. And now that we have more of it and democratization, I think that's going to happen for sure.
This was very interesting session, but before we wind up, I would really like to talk more about the plug and play accelerator program that you're a part of. So, congratulations on that, on being a part of the Silicon Valley Accelerator program in association with XDC. So, would you like to tell the audience a little bit more about what the program is about, and also how has your journey been so far, and how do you think this program has actually helped you?
Yeah, I think we've been part of a few programs. I think MasterCard, we were part of that accelerator as well. This one's been, I think it's only been a month, but I think it's been very valuable till now. Thank you for having us, firstly, as part of that program. The program is specifically centered, I think, the first cohort, it's centered around enterprise adoption of tokenization and blockchain. So very relevant to us. And if I think it's a 3-month program which ends in a demo day in the US in Silicon Valley on June 11th or 12th. The best part that I've found, apart from being in a cohort, learning so much, is they have a lot of access. So you guys plus Plug and Play have access to a lot of large institutions. Um, and there are these sessions which are called reverse pitches, right? In which an institution will come and tell us their issues, and they would pitch to us, hey, solve these problems for us, right? And I would say for any startup or any tech company, that is a gold mine. That is literally what you want. Your client coming and telling you, build this for us. There can literally be nothing better than that. And if you get that from the right partners and you get access to them, I think it's a huge unlock. So I would highly recommend this for anyone who's looking at institutions as a client base, to get into this program, to work with XDC and Plug and Play, and go through it. I think it's been wonderful till now.
Thank you so much, Milind, for coming on the podcast, sharing your valuable insights about Polytrade, RWA. Now, before we let you go, we have a fun segment always, which is the rapid fire question, where I'll ask you a few questions and you just need to reply in a couple of words. So, this is the fun segment, and I'm sure you don't know the questions, right? Explain RWA in one word.
Final destination for blockchain.
One RWA use case that excites you the most.
As I said, creator royalty is most exciting for me.
Web3 term that you secretly hate.
I would say king. I don't know if it's happened to you, but some calls, I can even mention who they were. It was Puke and May from Pukecast. They start the call by saying hi king, and I come from JP Morgan and stuff. I do not know how to respond to stuff like that. So king and queen are terms that it's been hard to get used to.
One myth about institutional adoption that people have.
I think this is maybe part of the origination story of blockchain and all that. That we are competing against institutions. I think that era has passed. Institutions are really actively looking at blockchain. At least in 2024, 25, it's been huge in terms number of interest that we've seen from institutions. So they are pro blockchain. Even public chains, they're here and they really want to make it happen now.
In next 5 years, do you think the DeFi TVL will exceed the inflows in RWA?
RWA will win, in my opinion.
What are you more bullish about in the next 12 months? Is it retail adoption or institutional?
I think this might be a little counter. I think retail will see the inflection point first. Institutions are going to take time still.
So, what is your dream use case in terms of RWA tokenization?
Yeah, I think it's happening. So it's maybe not a dream, but it needs to scale. I think definitely I've mentioned this 2, 3 times. One is creator royalties. I think maybe Disney IP, like having that part of that would be great. Something that I love and I can own and then, kind of get returns on is huge. And the second I think would be this private markets being more like being able to invest in early stage startups in a tokenized way. I think super interesting and super exciting because most of the returns have gone there and technology is just not stopping. It could be AI, genetics.
Bitcoin prediction by the end of 2025.
I think in any case, actually, Bitcoin's a good asset. So we are in the place where we can have stagflation because of, I mean, inflation is softening lately, but that could be an option. I think if you look at stagflation last time, real estate and commodities did really well, so Bitcoin should do really well, I think. So, but I think even if you have a good market, we have a stagflation, which is the worst kind of market you can have. I think Bitcoin might actually do well. So it's a good, no financial advice, but I think it's a good place to invest in Bitcoin right now. I would say 125, let's say.
That's a very conservative estimate that you've given.
Yeah.
And do you think Bitcoin is digital gold or do you think gold still has its value as a commodity?
I think Bitcoin will take over gold for sure as a narrative, as a long-term uh, inflation hedge, as a geopolitical strategic asset. I think Bitcoin is going to take over gold.
Thank you, Milind, for coming on the podcast. Before we let you go, do you have any advice for the viewers, something that you would like for them to take as takeaways from the podcast?
If you're not looking at real world assets, you should. I think it's completely going to change the financial system we live in. The next 10 years, we're going to see everything on chain that we can imagine. And if you haven't started your real world asset journey, start at Polytrade. Come to polytrade.finance. Use our AI search, find really interesting stuff like, songs that you can invest in, or find really boring stuff like tables you can invest in. And if you're looking at institutions, we also work with them. So if you're an institution, we'd love to work with you on how you can leverage real world assets. And if you're a founder, look at XDC as a place to build for institutions.
Thank you so much, Milind, for your valuable insights. And for all the viewers, the social media links to Polytrade will be given in the captions below. Do like, share, and subscribe Polytrade. And thank you for tuning in to today's podcast. I hope you've had an amazing time because I surely did. And until next time, keep building, keep innovating. See you next time.